Another Sunday, the end of this quarter. Next Sunday will be the first video of the second quarter, and the conflict still rages on. We had a few other interesting things I think we should pay attention to this week. There'll be no spotlight company this week again, because there is really only one story driving this market. So we'll give Claude a chance to update itself from last week about the events. We'll give it a prompt and we'll say, well, what do you think now? And it's not good. Let's have a look at what happened in the market for yields this week. And I think we had on Friday a change in the tone for ZQ. I think we hit a turning point. Look at the yields. I've highlighted them down here. This is the 2-year to the 10-year. This is since the beginning of the year to date. And in fact, most of this red isn't even year to date. It really is from February 27th, because we hit cycle lows on February 27th. Even the 10-year hit 397. Last time it hit there was October 22nd. We hit 3.97. We tied the low. So you had new lows all the way from the 27th of February. The next day, bombs started flying. So you've gone from 3.97 on the 10-year to 4.44. That's 47 basis points. That's 2 rate hikes. We've already had the rate hikes. Consumers do not borrow at the federal funds rate. The federal funds rate sets the tone for the rest of the curve. The rest of the curve has not waited. Financial conditions are tighter at the 2-year, which sets the interest rate for a lot of credit. At the 5-year, which sets the interest rate for car loans and leases. At the 10-year, which sets the interest rate for mortgages. We've already had the rate hikes. We've had 2 rate hikes, basically, if you think about it. The 3.38 was the low on February 22nd for the 2-year. We're 3.88. That is 50 basis points. We've already had 2 rate hikes. Financial conditions are already tighter. So if the Fed is looking at inflation, they can look at yields and say, hey, consumer credit is already 2 rate hikes higher. We've already increased rates by 2 hikes. What is a move in the federal funds rate going to do at this point? And if you listen to the Fed speakers this week, I read all the speeches, the consensus is pretty clear. They're not raising rates. They specifically say so in their speeches. We're not doing anything. We're not cutting, but we're not raising. We're just going to sit here and wait. And the market has already increased rates by about 50 basis points where it matters for consumer credit. And on Friday, ZQ had a big turning point. There was, from February 28th onwards, almost a perfect negative correlation. I could look at the price of oil and I knew ZQ was either up or down. Period. Oil up, inflation. Oh, Fed's going to raise rates. But Friday, that broke. You had oil up significantly, especially front month Brent and front month West Texas up significantly, like $6. And ZQ, about 9.5, 10 basis points of cuts from Thursday, saying, no, it's not going to be that bad. Let's take 10 basis points out. And so we had a bit of a change and a rumor that there was some unusual activity in ZQ contracts. Unusual. We're going to have a look at some unusual activity minutes before Trump likes to announce things. And I am going to change my theory on how policy is set. The curve, the 3-month to the 10-year, is steeper since the beginning of the year. So that's still better for banks today than it was at the beginning of the year. You have the long end of the curve going up. You have short rates staying where they are. Banks are more motivated to lend. However, we don't know where all this private credit stuff is, and we know that banks have exposure. They might not be so willing to take on a lot of credit risk at this point. KRE had a decent week, 0.52, given that SPY down 2.23, triple Q down 3.35. You had banks pulling out 0.52, and the dollar index, of course, is the clear winner here, but it's not going into U.S. assets, so it just feels like it's moving into US dollars but staying in euro dollar accounts. XLU, that is where you want to hide whenever you have stressful situations. Anything utility-like, anything that behaves like a utility. So if you go to the communication sector, companies like AT&T and Verizon that own these big networks, the networks aren't going anywhere, and the utility-like, they had a negative correlation with the market. Market down, these guys were up. Pipelines, and it's hard to pull apart pipelines now with energy prices, but pipelines usually don't respond to energy prices. They respond to product flows, and a lot of pipelines have what are called take or pay contracts. So you have this pipeline where the producer puts oil in and somebody pulls oil out the other side, and the producers buy a certain capacity, and whether they fill the capacity or not, they still pay the same amount for the capacity. Not so much for product flow, but for the capacity. So pipelines end up being a nice, safe place to be as well, that if you're looking for defensive sectors, anything in any of the sectors that is more utility-like tends to do well. Look at utilities, 2.11. The other nice thing about these utility-like companies is nice big dividends. They all have nice, so it's a night you get paid to sit in safety. And it has a negative correlation with the market. XLP, even staples, at least coming along for something here, but real estate very tied to the long end of the curve. IYR down. IWM, that's interesting for the week. IWM 0.36 squeaked out a small gain. TLT, no freaking way. Well, it's tied to the long end of the curve. And you can see the tighter financial conditions in the yield curve over here. The red line is December 31st. The blue line is March 28th. You have tighter financial conditions already. You already have two rate hikes already in the market in the last, what are we, the 29th? This happened on the 20th. Last 30 days. Now imagine if the Fed announced two hikes in the last 30 days. How freaked out everybody would be. Oh my God, but the market's already done it. Where it matters most. Let's look at ZQ. ZQ is pricing in 5 basis point hike by the end of the year. I think you can call that zero, really. It's just settling where everything settles. You get a couple of basis points one way or the other. I don't think there's information in there. Going out to May of 2027, 3.5, call that zero, basically predicting a flat curve all the way out to May. And Powell is done here in April, the last meeting. Warsh will more than likely be confirmed for June. All the arguments are in to the judge on both sides of whether or not to allow this case against Powell to continue. The DOJ earlier had found no evidence. Now this is not Janine Pirro, this is the DOJ, had found no evidence of any criminal activity at all. It is more than likely sometime this week we'll get an announcement that this thing is dead in the water. The only wild card left is, will this administration take the win and move Warsh forward? Will they take the win, or will the ego matter more than the execution of a strategy? Any other guy, you'd say, well, okay, it looks like Warsh is going to be in, but this guy, you got to say, I don't know. Is ego greater than policy? With this guy, I think it is. So I don't know. Flip a coin, right? But it's nice to see that ZQ broke that correlation. There is more concern about, well, look, this is global economic growth we're messing with here. This is probably a big capex pullback from a whole bunch of sectors saying, well, hang on a second, let's let the dust settle. There's a lot of stuff going on. We've got uncertainty about these tariffs. We've got uncertainty about energy prices. You've got geopolitical uncertainty. You have what looks like a big proxy war looming, where World War III could be fought in Iran and over Iran. You've got private credit issues. We don't know where that's going to go. We don't know what borrowing costs are going to be. And we don't even know if the king will still be the king come November, or if the worst of Trump is yet to come. That is my belief, that the worst of him is yet to come, because he won't lose the midterms. Where Republicans win, Republicans won. Where Democrats won, it was rigged, and I wouldn't put it past him to cancel the elections. He has no line in the sand, and with everything he does, declares an illegal war. I mean, that's a big deal. Do you think he'll stop? Real yields all higher last week, and break-evens went down last week. Look at that. Real yields higher, break-evens lower. Even OAS lower. Moving on to FOMC, April, 31 days away. The weight is pretty much on zero. There is some probability, and an decreased probability of 25 basis points. I think this is probably the right way to go. We have a jobs report this week, and it is going to cover the April jobs report covers March, and it includes the week that includes the 13th. The conflict was in full force at that time. So we can't say, well, the jobs report doesn't reflect this. It does, which also means on the other side, the apologists for the economy will say, well, it's not real, and it's not really that bad. You have to account for this, and you have to account for that. But we're also going to get revisions to January and February, and revisions tend to be negative. I think almost 100% negative for the last couple of years. All revisions have been to the downside. For June, Warsh or Powell. From a legal perspective, I think this will be over. From an ego perspective, will they take the win, or will they pull that gun out of their holster, aim it at their foot, and fire again? That is, you almost have to put equal weighting on that one. But the weight of it is 0.92.2. I think if they take the win, you get the result from the court case, they start putting Warsh forward, I think you'll see the probabilities of zero start to shift downwards to 25. I don't know that you'd get 50 with everything going on, but I think you'd probably get a cadence of 25 for at least 2 or 3 meetings. Almost nothing to see here anymore. Reverse repo sitting under $1 billion, but bouncing around. I think it hit a low of 157 million, somewhere around there. We're 992. It is the end. It's the last Friday in the month. There might be some sort of window dressing there, but I think we'd save that more for Tuesday. Reserves hanging out around 3 trillion, and I think they'll stay there until you have a change of focus from ample reserves to a more scarce reserves regime. TGA hanging out at their target at 850, and SOFR well behaved. Not much to see there. Let's move over to mortgage rates. 6.38 on the Thursday before the attacks. It was 5.99. So mortgage rates are up 39 basis points over the last month. That's a rate and a half increase. And mortgage apps are showing it, down 10.5%. Refis down 14.6%. Sorry, purchases here should be negative. Let's see if I have an eraser, and I can put a negative sign in. There we go. And let's look at our metals. And our metals really broke the trend, especially gold broke its trend on Friday as well. In the last, I shouldn't say trend, it's event sell-offs. It had basically a negative correlation with energy, higher energy prices. The belief was inflation. ZQ went lower, gold went lower. You don't need gold. If you have a stronger U.S. dollar and rising real rates, you don't need gold. That works against it, and it certainly did. There was some selling in gold. I will talk about that shortly. Silver had a pretty decent week. Same with copper and aluminum, platinum and palladium down. Oil, of course, is going to continue to price in week by week the conflict. Up almost 74% year to date. Food all up year to date. Food, energy. There is your headline of PCE and CPI. The question is, does that bleed into the core? Because we do take out the headline inflation, the Fed looks at the core, and if you have higher food and energy, which everyone has to buy, does it bleed into the core? Because it is an input for a lot of things, especially energy. But I must remind you again, energy prices are pretty much the same that they were 11 years ago. So if we were looking at energy inflation over the last 11 years, we would have to include, it's zero. It's zero on energy inflation. But does it bleed in? The longer it stays elevated, the more it bleeds into the core. The other thing that can bleed into the core is demand destruction. Is food costs are higher, energy costs are higher. I, as a household, don't just have unlimited funds that I can absorb all of this and continue to spend on everything else. Maybe it destroys some demand in the core. That headline is, higher headline is core destroying, which I think is just as likely as bleeding into the core. So the one-to-one relationship of higher energy prices, higher inflation, Fed's going to raise rates. I don't know that that makes a good equation. For mortgage REITs, look at this. Really, really down. I was looking at these on Friday, and I got to tell you, I'm if I were in the U.S., because if you're outside the U.S., you have a 30% withholding on that dividend. But if I were in the U.S., I would have a hard time not picking up mortgage REITs at these low levels. I would have a difficult time, and they would be a core holding for the next 4 or 5 years. Just that solid dividend yield, and the dividend yield is based on their net interest income and dollar roll income, not their EPS. And the price is based on their net asset value or close to their net asset value. So they're in this interesting position of having very healthy net interest income and dollar roll income that more than covers the dividend with low asset value. The asset value reflects the fact that interest rates have gone way up. The portfolio of their holdings takes a hit when interest rates go up, but the income from the portfolio does not change with changing interest rates. I would have a hard time not being in mortgage REITs right now. Okay, let's look at gold and copper. Gold is below its 50-day moving average, below its 100, but above the 200, 41.63, but it did spike all the way down to there. So it looks like it did find some support on the 200. US dollar diversification continues. So I don't know that the gold story is over. There is I looked around all last week, even with the help of AI, no solid evidence, at least publicly available at this point, no solid evidence that governments or central banks have been selling gold. There has been gold selling in Dubai, gold being sold at steep discounts locally because airstrikes have stranded bullion shipments. So traders got to get out of it. It was supposed to be shipped somewhere, and they're holding. It's like, well, we can't continue to hold it. We don't have the finances for it. We have to ship it to get paid. We're not. We got to sell it. So that could have been some of the when you're seeing that going on, gold being sold at steep discounts, that might have bled into the belief in the futures market, and the futures market sold off on that. But that's the only thing that I could find. Gold, I think the story is still in place. You have, I think, approaching unsustainable levels and direction on U.S. debt, and no one in Washington seems to be saying a word about it. So don't expect that to change anytime soon. This conflict is going to cost the taxpayers a significant amount of money, which they do not have. So that debt, look for that to increase. Wouldn't surprise me if by the time this is all over, you've added $300-400 billion to the debt, unless you can get rid of it tomorrow, which Claude doesn't seem to think so, and I don't seem to think so either. I don't think that just ends right away. So, and with the higher, longer end of the curve increasing, and with money market rates not expected to decline based on market sentiment. The interest expense of which America cannot afford because it just continually throws it on the credit card. It is like a pick coupon, in a sense. And the unreliability of the U.S. as a counterparty, that I think it is well within reason for somebody in Japan or somebody in China to say, well, what if Trump says, China's been ripping us off for years, they owe us so much money, we think we don't have to pay them these bonds. They owe us that money anyways. They've been ripping us off, folks. They've been ripping us off. Unfair trade practices. They've been stealing our money. Well, we're going to take it back. Would you put it past them to even float something like that? So I think that there is concern among non-American central banks to say, look, do we really have to hold so much of this stuff? I think that continues on. For copper, you have two sides of the story here. We don't have an inventory problem anymore. The inventory problem is we got a lot of copper. Inventories at LME, 330,000 tons, highest since 2009. New York, 1 million tons. This is 5 times the level it was last year. Some of it due to declaring copper a strategic mineral and stockpiling copper. But a lot of it due to, it seems, a pullback in industrial activity because of the start of this conflict. Also, Chinese buyers seem to have been rejecting copper over $13,000 per ton. And we had a big pullback in copper. Copper is below its 50, below its 100, but still above its 200, but it did close below its 200 last week. It is now above its 200 now, so looks like it found some support at the 200. With expectations of lower industrial demand, if we think about demand destruction, and this can actually... here's the thing now, I don't think that what is going on in Iran is the cause for a global recession. I don't think that's true. I think it is the cause for much lower global growth, but I don't think it's a cause for a recession unless you're already in a regime of low growth. This is why these exogenous events can cause recessions. Is if you have a regime of high growth and you have an exogenous event like this, it would shift you into lower growth. If you're in low growth, it can shift you into recession. It is not recessionary, it's just counter to economic growth. And if growth is slow enough, it could make it negative, thereby creating a recession. The longer it goes on, the more it will become normalized, though. You already have Saudi Arabia diverting oil to the Red Sea. From 1 million barrels a day, I think they're at 4.5 million barrels a day. So of the 10 million barrels a day we expected out of the Strait, 3.5 have been directed to the Red Sea. Iran is actually selling more oil now than before the invasion. This is just a bonus for them. Ships are still going through to China. By estimates, 2 million barrels a day. So you've diverted 3.5 over to the Red Sea. You've increased Iran's exports by roughly 500,000 barrels a day. So there's 4 million of those 10 million. So you really only have a deficit of 6 million. The longer this goes on, the more alternative routes will be found. So it will become normalized, and it will be background noise, and it will be another forever war for the American taxpayer. The losers here, Russia's winning with higher oil prices. China's getting its oil probably at a decent discount to wherever the global market is right now. Other countries are making deals with Iran to let their ships go through so that they can get their oil. The one losing country here clearly right now is the US, losing on almost all fronts, spending billions of dollars to take down tens of thousands of dollars of drones. So as far as inventory goes, there's lots of copper. However, on the supply side, Chile and Peru, which are big providers of copper, social license to operate continually being challenged, environmental and water rights, plus persistent strikes. So there is supply also coming off. as demand is coming off. But to be honest, we do have enough inventories now that if this did end tomorrow, you could probably expect second quarter, third quarter to work off the inventories. I am long copper right now, which I don't mind being long because I'm going to continue to roll those contracts. But for the next, I'd say 60 days, 30 days, 60 days, I think it is worth selling some upside calls at 575 to 580, somewhere in here. But my copper thesis long-term has not changed. I see this as a buying opportunity. But I do also recognize that for right now, inventories are elevated. Industrial demand is pulling back. And if this does continue, if this does shift the global economy into much lower growth, industrial demand will continue to drop. You could see copper push to $5, the high 480, 490s. So I think it would be prudent to sell some upside calls on copper at this point. Let's take a look at cybersecurity. And I think I got it right here. I summed it up. This is a stupid market. This is the ETF for cyber, CIBR, which is the largest by assets under management, largest pure play cybersecurity ETF. Down 22.65 from its all-time high, October 8th, 2025. It was at 78.55. I shouldn't say all-time high. 52-week high. I wrote all-time high. I don't know that it's an all-time high. I didn't go back more than 1 year. It is a 52-week high. I take that. So just let's erase the ATH. Maybe it is an all-time high, but I should have only wrote 52-week high. 78.55. We're down 22.65. Cybersecurity is in a bear market. The 50, the 100, and the 200 from where we are, we have lost all of them, and the 50 is below the 100, which is below the 200. This is the fastest moving average, the slowest moving average. You'd usually want to see them the other way. The 50 above the 100 above the 200. That is an upward trend. We are clearly in a downward trend. All the moving averages are facing down. We are in a bear market. That is a lot of negative sentiment. Looking at some of the players here, CrowdStrike, I got the drawdown from the 52-week high in year-to-date. All of them in bear market. Zscaler down 60% off its 52-week high. Snowflake 45%. Cloudflare 22%. Palo Alto 37%. CrowdStrike 35%. Year-to-date down significantly and with good earnings. Last quarter earnings were good, and here we are. Good growth as well. Palo Alto, if you were watching on Friday, this was, I think this came out early Saturday on the SEC website. The CEO bought $10 million, 68,085 shares of Palo Alto at Friday's pricing, bought $10 million. What's the sell-off all about? What's going on? Well, first it was Claude Code. Oh, Claude Code has cybersecurity capabilities. And now it's this rumor of Claude Mythos, which got leaked. And I'm doing leaked in air quotes, got leaked, if you know what I mean. Some of the comments in there, this is what seemed to be missed. It was what was focused on was look how quickly it can find vulnerabilities in code. Vulnerabilities that other people have never been able to find for years and years. Didn't even know existed. Claude was able to find it in like 30 minutes or 90 minutes, was able to find all of these vulnerabilities and fix them. Oh, you're not going to need cybersecurity anymore. Oh, you're not going to need it. But they didn't read the rest of it. Anthropic clearly says in there, can create new cybersecurity risks. Yes, it can find vulnerabilities, but it can also create new cybersecurity risks. Described as posing unprecedented cybersecurity risks. That if they release this out to the market, it poses unprecedented cybersecurity risks. So it's in release right now, in small release, to security and enterprise early access customers. This is the progression of the platforms it's had: Haiku to Sonnet to Opus, which is a killer, Opus. And the next one is going to be called, at least if we take the notes that were released, called Capybara. And there may be different models at that level, but that would be the Capybara level. And they call it a step up, not just a small little move. So it's not just an Opus version. It's not just a continuation here. It's so significantly different, it warrants its own family. And Opus 4.6 in extended mode is wicked. I've said this before, that I don't believe in AGI and general intelligence. However, if I were going to change my mind, Opus 4.6 does present me with that potential for me to look at and say, well, maybe I'm not so sure. It is significantly better than what's out there. And if you've been using Gemini over the last few months, it is not as if you're just watching Opus get better. You've actually seen Gemini get worse. I don't know what's going on with that model, but prompts that it would be very good at 2 months ago, I run now and I go, what is this? I mean, is this all you got? Are you just giving up? Have you looked over at Opus and just said, I can't compete with that, and shrugged your shoulders and given up? Using their image generator. Oh my God, what trouble you have with that. If it doesn't get it right on the first try, don't even try amending it, because it starts moving all things around. It's just a nightmare. I don't know why I continue paying for it. Same with OpenAI. I don't know why I continue paying for it, because my go-to is Perplexity and Claude. I'll talk more about that shortly. But here's the deal with this cybersecurity thing. Cybersecurity is not code. Code vulnerabilities represent the smallest vector of attack. The bigger vector of attack is social engineering. Is me getting a little bit of your information here, a little bit of your information there, getting into your system with your credentials and hanging out there until I can find a place to move. It's not code vulnerabilities. And someone in Discord had posted a notice about this saying, well, what do you think about all this stuff? What do you think about Mythos? I mean, look what it can do. You're not going to need cybersecurity anymore. And my answer was, all it takes to stop a good guy with a gun is a bad guy with a gun. So every company has to ask themselves one question: are we better with the gun than the bad guy? Cybersecurity is not an optional line item for companies with liability and insurance and lawyers circling the castle, waiting for some kind of negligence to happen. To not have outside cybersecurity, to have one breach which costs one person 1 penny, lawyers are going to be all over that stuff. This is almost a compliance requirement for companies for cybersecurity. It is not code. Harden your code all you want. You are a vector of attack in so many different ways. What about all the swipe devices you have, the security cameras you have, the employees you have? Some of them will attack you from the inside. So tighten your code all you want. How are you going to stop that disgruntled HR person from accessing some files in the middle of the night? Cybersecurity can spot that, because it will spot an anomaly, a needle in a haystack of saying, wait a minute here. This person never accesses the system at this time and never accesses those files. Okay, stop right there. Until we can figure out what's going on, stop right there. And if I spot behavior in company A, I now know what to look for in company B, C, D, E, F, G, on and on and on and on. As soon as I become a cybersecurity customer, I get the protection from all the behavioral stuff they found in other organizations. Not just, oh, I've got very hard code, you're not coming after me. That's not what cybersecurity is. So this is stupid. This is stupid. I bought a bunch of cybersecurity on the closing on Friday. I have CrowdStrike. I have big position in Palo Alto. And it was nice to see the next day that the CEO also agreed with me. $10 million purchase. This, by the way, is where defense budgets are going to be going in the future. The The future is not $4 million missile interceptors and boots on the ground. The future are $2,000 interceptors like Ukraine has, $10,000 to $20,000 drones and swarms of drones run by dweebs with joysticks in a data center somewhere underground in your own country and fought digitally. Bullets and missiles and weapons, that's yesterday's war. That's your grandfather's war. Let's have a look at some unusual trading activity, and this is not new. There is unusual trading activity before almost all of Trump's announcements. Things that make you go, The 7:05, Trump announces deferment of strikes on Iran. 6:49, a sudden spike in futures trading. Accounts are anonymous. So unclear whether they involve insiders with advanced knowledge, coordinated traders, or independent speculators. I would say that as you go from insiders with advanced knowledge to independent speculators, the idea that a bunch of people independently showed up 15 minutes before the announcement, I would put almost no probability on that. You would have to have these independent traders coordinated in some way. So coordinated traders doing this, I was around on that morning. I had already closed 20 of my ZQ contracts. ZQ was behaving like a meme stock, and I'd taken a chance to walk to the end of the patio and look out on in the valley and think deeply about my next move. I was going to close them all. Walk back to my computer, and it's like, whoa, what just happened? There was nothing in that morning that said I should go in heavier. I should do this. I'm going to short oil and buy futures. I was nowhere near that. It seems unlikely it would be coordinated traders, given that the fog and the darkness that was hanging over the market that morning. I got to go with insider traders with advanced knowledge on this one. Reuters, citing 3 anonymous officials, reported that the SEC's top enforcement official resigned last week after agency leaders blocked her from aggressively pursuing cases touching Trump's circle. This is the SEC. Not the FBI, not the DOJ. This is the SEC. This is what the SEC looks for. Whenever it sees that, it says, okay, let's ask some questions. Whose accounts were these? Who are they attached to? And there's anything going on here. They always do that because greed leaves footprints and the SEC can spot it quickly. That, you have all of this unusual activity. And the question over the last year has been, where's the SEC in all this? Trump owns the SEC, but it's not as if people aren't working. There you go. This is from the same story that I got this chart from, pointing out other things. Hey, look, Trump's crypto venture generated billions. Investors, including a Chinese crypto mogul who later settled his SEC fraud case, Emirati Royal lobbying Washington for AI chips. The 2 douchebag sons, because douchebaggery is hereditary, invested in drone companies competing for Pentagon contracts. Well, obviously, given the optics on that and the ethical stance of this administration, they're clearly not going to get that, right? Trump has granted clemency to more than 70 donors, allies, and other peoples convicted of fraud, including one pardoned after his family donated $3.5 million to a Trump super PAC. So I have a hypothesis. We have been thinking, I think, or at least I have been thinking the wrong way. I have been thinking that the administration is more than likely going to profit from their policy. That profit is a function of policy. A couple of weeks ago, I raised an if question as well. I said, what if Trump is there to punish America for not supporting him in 2020? What if this is his ultimate revenge on everyone? And he wants to destroy the country? Well, you got to give him an A+, because he's well on his way to doing that. And it was more a comment on his pathetic execution of almost anything. I've never seen a team execute so poorly as this. That how can it be that you could execute this badly unless you're actually trying to execute this badly? And if you were, A+. But if you're trying to execute well, you got to give you all an F and ask you to leave the classroom right now. You don't belong here. The other side of it is, well, he's profiting from his policy. What if it's the other way around? What if he's setting policy as a function of profit? Where can I make money? Well, we can, if you said this and you said this, we could make money here. Okay, that's what I'll say. That policy is what happens after you determine where you're going to make money. This seems to be a more logical statement, that maybe he isn't dumb. Maybe he isn't blustering and lying. Maybe he's playing a great poker game that nobody knows what game he's playing, and he's saying these things because that is the conclusion of the trade setup. Not the trade setup being in response to his policy, but the other way around. Policy in the US is a function of this administration's profit. Got a 2-year chart of Meta up. Last week in California, they lost a case, a social media addiction product liability suit. The penalty was small, $6 million. Meta was responsible for 70% of the payment, Google for 30%, $4.2 million from Meta. That's nothing. That's a couple of seconds of revenue. It's a mosquito bite, but look at the red bars all the way down here. A little under 600 before it happened. The announcement comes out, they end at 520. It is because of the way the legal system works in North America. You have common law where the decision of one court sets a precedent for other cases, so that other cases that are suing for the same thing can say, in the matter of so-and-so versus Meta and Google, the judge found this. That sets the precedent, because you are actually setting law at the same time. Now a precedent in about 2,000 other similar cases. So it's what it opens the door for. You wrap all of these up into a class action, which I'm sure Meta and Google and all these others would probably like to see, as opposed to trying to litigate thousands and thousands. And that's just 2,000 active. You got a whole bunch of ambulance chasing litigators out there that need to make partner, and they don't care whose lives they destroy to get it. They're going to do it. They're going to convince other people that, oh, it's not your fault. We can sue for this. We can get other people to give us money for free. Based on your free decisions to do things, we can get other people to pay if you don't like the outcome you got. Lawyers. Down 34%. And because of this, I don't think that I would want to go into this one. Same with Google. I don't know that I would want to go into that one. And Google has other issues too. Who wants a URL search anymore? The Google search itself is dead. Google waited way too long for their AI search. I go to Perplexity all the time. Gemini has entered the realm of it sucks. Gemini was fantastic. It was the lead by far. And I don't know what they've done, but the degradation in the model over the last 2 months, it's almost unusable. Same with their image generator. If you don't get it right the first time, don't even bother saying, no, please remove this, move this over here, because it'll change so many things and you'll never get back to where you were, to the point of frustration. Just delete it and redo your prompt and add the extra line for what you wanted, because it's just turned into garbage now. I waste so much time with Gemini that it is a productivity killing tool now. I don't use Google search. I'm not going to use their Google AI because it's based off Gemini, and Gemini sucks. Perplexity is great. Opus 4.6, if you have not used Opus 4.6, once you start using that, you'll never go back to either OpenAI or Gemini. I find I barely use Gemini now. OpenAI it's just there. It's sort of like a trophy on a shelf thing. I paid $200 for this. I don't know that I'm going to continue paying for. In Canadian dollars, it comes to $400 a month almost for the top tier Google, and I think $250 a month for top tier OpenAI. I don't know why I'm paying for it. I get no value out of it. So I think Google, Google just might be a short from a legal perspective with all of these cases that will be coming after them. Legal fees, settlement, class action. Oof, it's going to be ugly. From what are you going to do with Google? Okay, so you've got AI search, but Gemini sucks now. I don't know what you've done, but you've degraded the performance of Gemini. So what am I interested in you for? That I'm going to cancel tells me that I'm probably not the only one. I don't know. That sounds like all the elements of a short to me. I saw this little nugget in my news feed. I think it's a Swedish company named Donut. World's first all solid-state battery in production vehicles. CATL in China announced that it was working on a 500 megawatt per hour per kilogram battery, solid-state battery, but has moved production back, saying, we're still in testing. It's not production ready. These guys are saying in production 400 watt hours per kilogram. Full charge in 5 minutes, designed for 100,000 cycles, lower cost than lithium. I mean, it's everybody's wish list. There was some concern whether any of that was real, so they put this up. They created a new part of their site for other people who are testing their product. This is all third-party evidence saying, don't believe us, why not believe other people? Ready for real-world deployment. Energy density, 400 watt hours per kilogram of energy. More energy, less mass, more range, or smaller packs. Proof, Verge motorcycles, full charge in less than 10 minutes. Out of this world performance, full charge, and there's no need to limit charging to 80%. Full charge and full discharge are safe, repeatable, and expected in daily operation. Designed for 100,000 cycles. Here's typical lithium ion, 1,000 to 1,500 cycles. High-end lithium, 5,000 cycles. Look at them, 100,000 cycles. It never degrades. It's cheaper than everything. You can charge faster than anything, and it's a better product. The range they're quoting on some vehicles almost up to 1,000. I think it was kilometers. I think they quote them in kilometers. Up to 1,000 kilometers. Per charge. Isn't that incredible? Anyways, it's Donut. Donutlab.com if you want to do a little bit more research on this. But if this is real, this is a big deal. This is a really big deal because these batteries require no rare earth metals. None at all. And if it is the real deal, why would you ever buy an EV today, given the current battery chemistry? If this is the real deal, production will move fast. Within 2 years, you'll have solid-state batteries out there. And if you can go 700, 800, 900 miles on a charge, there goes range anxiety. That's your solution. That would then really accelerate the move to EV. I'll leave this with you to do your own research on. Okay, let's look at SPY. It has lost the 50. It has lost the 100. It has lost the 200. The 50 is below the 100, and it is down 9.05%. The correction level is 627. We're 634, $7 above a correction. Less than 1% to go. If we look at the last closing, we got to go back to August 11. 8 months of gains are now gone. IWM down, call it 10%. It's in correction territory, really. IWM has lost the 50, the 100. Only the 200 remains at 242.11. We're 243.10, just another dollar. The worst of them is the triple Qs, down 11.36, well into correction territory. Has lost the 50, has lost the 100, has lost the 200. The 50 is below the 100. There's not a redeeming quality to these ones at all. Forward operating earnings have gone up week over week. I believe a lot of that is probably energy. But if we are moving into a slower growth global economy, That forward earnings, that's aggressive. That's going to have to come down. At 322, we're under 20 times forward earnings. You may look at that and say, but look, we're under 20 now. Is it a buy? Because we could, if we trade back up to 23, that is almost 1,000 points up. 3 times 322, 966 points up. When we get back to 23 at these higher earnings, come on. I think it's a little overstated. So I put operating earnings here at different levels. What if it were, 300, 280, 260, 240? Here's the multiple that you would have. So if you think 322 is too high, 320 or 300 may be more likely. You're 21 times forward earnings. If you get into recessionary area, operating earnings can get cut in half rather quickly. Just going down 25% to 240, you're at 26.5 times forward earnings. If you get full-blown recession, you can bring your earnings down maybe to 210, 220, and your multiple to 15. And 15 times 220, you're getting to 3,300. Being that you were at 697, this is roughly about 330. Drawdowns of 50% are not unrealistic. That's what you had after .com. You had 60-some% great financial crisis. So a drawdown of that much is not uncommon. I don't think we're there on just this. Something that can be repaired, even if it continues on, it can be repaired. You can find ways around it. You can find other countries that can increase production. It would take a little bit of adjustment, but even if this went on for a year, the world would adjust around it at maybe a slower level of growth for a couple of quarters before it adjusted. This isn't the kind of thing that takes the world down. Credit usually is the thing that takes the world down. So if you do get more concern around private credit, if it does creep out in other places, if consumer credit spills over, we talked about that a little while ago. If consumer credit spills out, if credit tightens up, then yes, you could cause a recession. And with all of this going on in the background as well, it could be a much longer recession. A recession would be the worst thing that could happen, I think, for the global economy. Not just because it's a recession, but because you have AI. What the pandemic did was it shifted the growth rate of the movement to online activity. It changed the slope of that function. You moved a lot more online very quickly, and then when things normalized, you had a higher step function up in the growth rate of the move to online activity. A recession now would accelerate the move towards AI faster than it would happen on its own. We only have one earnings this week, Nike. Well, not one. I think we have 5, but it's the only really one that grabbed my eyes. I went through them and I thought, well, for me, I wasn't interested in the others, but we have Nike. And we do have volatility here. Elevated. You can see it coming up the far end of the chart here. We're sitting at 25 somewhere. IV last was 25. Look at the spike you had here when you were liberated from some of your money that day. That would bring it way up here. I don't think we're there yet, but let's see how we open. But this is just not good. This is not good. There's nothing good here. This is not good either. You cross that 10%, all of that begins to act as resistance. We're going to continue on from last week. We asked Claude to forecast what the next 24 to 48 hours would look like, and we posed the question of who is the crazy kid here. Claude said, there is no resolution in the next 24 to 48 hours. I see no way out, and Iran is the crazy kid. Let's see where we are this week. Here is my prompt. It is now March 28th. Houthis have joined Iran in the conflict, having launched rockets at Israel. Reports are that Israel is slowing down its use of interceptors and that Iran may be getting help directly from Russia. Update your knowledge of the current situation using reputable sources and give me an updated 24 to 48 hour forecast along with your best estimate of the path over the next week. Will Iran come to the table? They saw a bluff by Trump as weakness and they pressed their advantage, that being their willingness to stay in the fight while the larger attacker attempted to bluff his way out several times last week. My choice of the word bluff, feel free to disagree. However, it is very possible to overplay your advantage, and Iran may risk doing just that. Will Trump just leave and let Europe clean it up as retribution for not stepping up sooner? Trump's rhetoric on NATO is dismissive, so a move like that may be likely. Will Trump issue an order restricting U.S. exports of oil and gas to help America, even if it hurts Europe and Asia? Kind of leading a little bit, I will admit that. I read that prompt, I go, nah, it's willingness to agree with you here. But it does have, Claude has shown itself absolutely willing to tell me, no, I disagree with you. So I thought, well, let's leave it there. Let's see. The battlefield is March 28th. The war has now reached the 1 month mark. The situation has escalated meaningfully since we last spoke. Look at this. Since we last spoke. Not since I last answered, but since we last spoke. Talking like a human. Impressive. At least 1,900 people have been killed in Iran since February 28th. 13 U.S. service members have been killed and more than 300 wounded. At least 1,189 people have been killed in Israeli strikes on Lebanon since March the 2nd. Several critical developments. The Houthis are in. Joined the war on March 28th, conducting a ballistic missile attack towards Israel, triggering air raid sirens in Beersheba. Yemen's Houthis confirmed their first attack on Israel since the war began, vowing to continue striking in the coming days. This opens a third front for Israel. You never want to fight a war on more than one front. 2 fronts are tough. 3. Iran from the east, Hezbollah from the north, and now Houthis from the south. This is exactly the multi-axis pressure scenario that Israeli defense planners have always feared. Israel's interceptor crisis is real. Israel has begun limiting its use of its most advanced missile interceptors on ongoing Iranian barrages. As ongoing Iranian barrages strain stockpiles, forcing the military to increasingly rely on upgraded but less capable systems. In recent days, 2 Iranian missiles struck the southern cities of Dimona and Arad after interception attempts using modified lower-tier systems failed. A leading British defense think tank reports that Israel has used most of its Arrow 2 and Arrow 3 interceptors, while U.S. THAAD missiles protecting Gulf allies are heavily depleted. The IDF denies a critical shortage, but the strain on U.S. inventories reportedly pushed Washington to accelerate rebuilding. The U.S. expended roughly a quarter of its THAAD interceptor stockpile during the last 12 days' war alone. With the Houthis now adding another vector of incoming fire, the math only gets worse. Russia's role. Russia has focused on intelligence sharing and logistic aid, with U.S. officials reporting Moscow supplied Iran with real-time data on American warships and aircraft, enabling more precise retaliatory strikes. A Shahed drone with a Russian-made Kometa B satellite navigation model, which acts as an anti-jamming shield, struck a British airbase in Cyprus. That is wicked. A drone. Satellite navigation from Russia, acting as anti-jamming shield. Oof. China has supplied Iran with drones, anti-ship cruise missiles, surface-to-air missiles, and components, while Iran uses China's, I'm going to kill this name, Beidou satellite navigation to produce decoy signals that confuse threat analysis. But crucially, Moscow is not necessarily, this last sentence I think is incredible. Moscow is not necessarily interested in an Iranian military victory, since skyrocketing oil prices make Putin financially capable of continuing hostilities in Ukraine. Russia is helping just enough to keep Iran in the fight, not enough to end it. The diplomatic track, such as it is, U.S. Envoy Witkoff confirmed presenting a 15-point framework for a peace plan through Pakistan as mediator. Iran countered with its own 5 conditions, including war reparations and rights over the Strait of Hormuz. Iran has called the U.S. proposal maximalist, unreasonable. Trump delayed a deadline to destroy Iran's power plants by 10 days to April 6th, citing Iranian government request. And this is funny. We look to Iran going, is this true, Iran? Is it true? Iran's military spokesperson mocked Washington's push, saying Iran would never come to terms, and told the U.S., do not call your defeat an agreement. Oh, I think I got to follow this guy's feed. Do not call your defeat an agreement. Trump's rhetoric is all over the map. Secretary of State Rubio said Washington expects to complete objectives in the next couple weeks. Vance says the war will continue a little while longer. Meanwhile, at least 15 U.S. service members were wounded Friday in a single Iranian strike on a Saudi airbase, and thousands more Marines are deploying forward. Now to your questions. Was Trump's winding down talk a bluff, and did Iran see through it? I don't disagree with bluff, though I'd nuance it slightly. I think it was a trial balloon for domestic consumption more than a bluff directed at Iran. Okay, I can see that. Trump was testing whether he could declare victory and move on. Iran absolutely read it as weakness, or more precisely, as confirmation of what they already believed, that American political will is finite and is being eroded by gas prices, stock market turmoil, and body bags. Iran's military hardliners have been setting maximalist terms, demanding sanctions lifted, compensation paid, and legal guarantees against future aggression, precisely because they believe time is on their side. The appointments of Iran-Iraq War-era IRGC leaders to high-profile positions demonstrate that the killing of Khamenei fueled a tilt toward hardline figures who will insist on major U.S. concessions. Your crazy kid analogy holds perfectly here. Trump tried to walk away from the fight mid-swing, and the crazy kid took it as an invitation to press harder. The strait stays closed. The drones keep hitting Gulf refineries, and now Houthis have joined in. Will Iran come to the table? Not on Trump's terms, and not in the next 48 hours. I did this on Saturday, so the next 48 hours would be Monday by noon. Iran is doing something very deliberate. They are responding to messages through intermediaries while publicly denying that negotiations exist. Iran's foreign ministry spokesperson denied negotiating, but told state media the ministry was responding to requests through intermediaries of friendly countries. This is classic Iranian diplomatic behavior, maintaining the posture of resistance while keeping the door cracked open just enough that they can walk through it later on their own timeline. Iran will eventually come to the table, but only when several conditions are met. I agree with this paragraph. Once I read it, I thought, yeah, that makes a lot of sense. They need to be able to frame any deal as a victory, or at a minimum as the aggressor's capitulation. The deal must include something concrete and face-saving like reparations or formal recognition of their Strait of Hormuz rights. And critically, the bombing must stop before they negotiate, not after. They learned from the February disaster. Oman's foreign minister announced a breakthrough on the morning of February 28, saying peace was within reach, and Operation Epic Fury began that afternoon. Iran was attacked during active negotiations. They will not allow that to happen again. Can Iran overplay its hand? We don't have that much more. Yes, and this is the most important question you're asking. There are several ways Iran could overplay. First, the Houthi entry and escalation against Gulf states risk turning potential mediators into enemies. Iran hit Qatar's Ras Laffan LNG facility. Well, we already know that from last week. Second, the nuclear question is now live in a way it wasn't before. At this point I was reading, I said, whoa, Claude, I never said anything about nuclear. It brought this on its own. Now live in a way it wasn't before. The debate among Iranian hardliners over whether Tehran should seek a nuclear bomb is getting louder, more public, and more insistent, with the Revolutionary Guard now dominant. Hardline views on Iran's nuclear approach are in the ascendant. If Iran signals it's moving towards a weapon, it gives Trump and Netanyahu the one thing they've been lacking, a clear This is new words to me, these Latin words, casus belli, that even Europe and China would struggle to oppose. Third, the interceptor crisis cuts both ways. If Israel is generally running low and an Iranian or Houthi missile hits a major population center with significant casualties, it could trigger a response so disproportionate that even Iran's crazy kid resilience would be tested. There are voices in Israel's government who want the war expanded, not ended. None of this sounds like we're getting a resolution in 24 to 48 hours. Will Trump walk away and let Europe clean it up? This is the scenario I find most plausible in the medium term. Not a clean handoff, but a gradual American pullback accompanied by angry rhetoric about NATO being cowards. The groundwork is already laid. Trump told Financial Times, either you go to Hormuz or NATO will have a very bad future. European leaders have flatly rejected this. Germany's chancellor said the conflict has nothing to do with NATO. UK Starmer said they will not be drawn into the wider war. But here's the problem. Europe can't clean it up. They don't have the force projection. They don't have the interceptors. They don't have the carrier groups, and they have no relationship with Iran's new leadership. If Trump walks away, the strait stays closed, oil stays above 110, and Europe faces an energy crisis that makes 2022 look like a minor inconvenience. Trump may view this as leverage over Europe rather than a failure, punishing them for not helping by letting them suffer. Will Trump restrict oil and U.S. gas exports? This is the this is the wild card that almost nobody is talking about yet, and you're right to raise it. The U.S. is now the world's largest oil and gas producer. An export restriction would be the nuclear option in energy geopolitics. It would crater European and Asian economies while temporarily lowering domestic prices, which is the only metric Trump cares about with midterms approaching. Trump officials privately estimate higher prices could linger for months. Political incentive to act is enormous. I think a targeted restriction framed as America First energy security is very much on the table if prices stay above 110 for another 2 to 3 weeks. It would be devastating to allies, but perfectly consistent with Trump's transactional worldview and his fury at NATO. And let's look at the next 24 to 48 hours. We've only got this left. Houthi entry is the immediate escalation risk. Israel will almost certainly strike Yemen in response, which opens yet another front and stretches interceptor supplies further. Iran will continue its persistence, not volume approach. They've announced 70 waves of attacks so far and will keep going. April 6th deadline on power plants looms. Pakistan and Oman will continue shuttling messages, but no breakthrough is imminent. So nothing in the next 24 to 48. The next week, critical inflection point is April 6th. He did move it to April 6th, gave it 10 days. You can't then say, well, I'm going to move it another 10 days because, well, you look even weaker. Trump's extended deadline for Iran to reopen the strait or face attacks on its power grid, which, by the way, I will remind everyone listening, is a war crime. If Trump follows through, it's a massive escalation that would devastate Iranian civilians and likely trigger the hardliners to push for a nuclear breakout. If he doesn't follow through, it's another bluff that Iran will pocket. This is the trap Trump has built for himself. Every deadline he sets and then extends confirms to Tehran that he's looking for a way out, which makes them less likely to negotiate, not more. Most likely path over the next week is continued military operations with gradually declining intensity from both sides, increasingly frantic mediation by Pakistan, Oman, Egypt, Turkey, and a slow grind towards some kind of face-saving ceasefire framework that neither side fully accepts. But the honest assessment is this. This war could still go either direction, towards a messy, incomplete truce or toward a dangerous escalation if someone miscalculates. And with the crazy kid analogy fully operative, the side most likely to miscalculate is the side that keeps thinking it can bluff its way to an ending. Beautiful sentence. Also last week I'd heard a rumor, so I thought I'd ask Claude. There is some rumor, and I put in bracket story, maybe, not just a rumor, but maybe a story, that Qatar prefers to stay out of this, citing that Iran has been here for 1,000 years and will continue to be here. Can you find any info around that? Found it. It's not a rumor. It's an official statement from Qatar's foreign ministry spokesperson. I got to follow this person. Wait till you see some of the things he says here. Said the war involving Iran must be resolved through diplomacy. Said Doha is not directly mediating between the parties. He stated that total annihilation of Iran is not an option. Stressed the need for coexistence in the region. We will live next to each other and we will be neighbors, and we have to find a way to live next to each other. The thousands of years framing appears in a slightly fuller version of his remarks. Al-Ansari said, by the way, Ansari, that is my heritage. Yes, if you're wondering if I had any Middle East heritage in me, I do, from my grandfather's side, Ansari. So it troubles me greatly to see this going on in my homeland. Al-Ansari said, Iran has been here for thousands of years. No one is going anywhere. Total destruction is not an option. We live side by side. We will be neighbors and find ways to coexist. This is a remarkable statement when you consider the context. Qatar has been bombed by Iran. Now, we don't have to go through this, just a repeat of what was going on. Qatar is essentially saying, we're not joining the fight and we're not going to pretend Iran can be destroyed. On March 2nd, Al-Ansari announced that Qatar would not engage with Iran, meaning not engage militarily, even as Iranian missiles were hitting Qatari territory. What's even more revealing is the apparent deal that followed. Qatar appears to be returning to normalcy, with its defense ministry not announcing any Iranian attacks against Qatar since March 19th. It appears that the return to normalcy follows understandings or guarantees Qatar received from Iran. Against the backdrop of Qatar's pro-Iran policies prior to and during the war, schools reopened, Qatar University resumed operations, and life began returning to normal, while Bahrain, the UAE, Saudi Arabia, and Kuwait were still getting hit. This starts to get interesting, the wording here. This is Qatar doing exactly what your crazy kid analogy describes. They're the kid at school who watched the bigger kid pick the fight, assessed the situation, and said, I'm not getting involved in this because that kid across the street isn't going anywhere and I have to live on this block long after the bigger kid loses interest and goes home. It's the most strategically lucid thing any country in the Gulf has said during this entire war. The Americans will leave, they always do. Iran will still be here. Qatar has to live next door to them forever. And $26 billion in LNG damage is a pretty expensive lesson in what happens when your neighbor decides you've picked the wrong side. A Council on Foreign Relations analysis noted that Gulf leaders did not want the war and have privately expressed frustration with the US and Israel for causing chaos in the region. Qatar is just the one saying it out loud.